Alrighty, what is going on, everybody? Welcome back to another CYPRX educational and technical analysis video breakdown. As always, bringing you guys the realest information and the realest insights in the game. No fancy indicators, no fancy Fibonacci, just straight fundamental education, technical analysis, and logical price analysis. If you guys enjoy these video breakdowns and you actually learn something of value here that you can take and implement into the real live markets, do us a favor, smash that thumbs up button and subscribe to the platform. We're going to be going over Agix technical analysis, some insights that we gave ahead of the curve to the private CYPRX community, and how you could have used our personalized strategy here at CYPRX that we teach to our monthly and CYPRX members to actually capitalize on moves in this market. So first, giving you guys timestamps so you don't think that we're out here just making this stuff up, okay? I want to show you guys both in the private community and publicly on X. We told you guys what needed to be paid attention to. So here you can see in the private El Chapo analysis in my personal analysis section where I give the CYPRX members, excuse me, my voice is a little cracky, my personal technical analysis callouts and fundamental analysis breakdowns. You can see yesterday, March 5th, Tuesday, at 6:23 p.m., I sent them this technical analysis play on AGIX where we were looking to target around $1.05. You can see that at the time of sending this specific screenshot, the price of AGIX was roughly around 80 cents, and I gave them the scenario plays that I wanted to see in the market for confluences to be comfortable buying up price to see it come into these $1.05 ranges, where we were looking at a risk on market mood, dovish Jerome Powell, dollar back below 103.600, downbeat ADP and JOLTS job figures, downbeat labor market data, and so on and so forth. And we got all of those factors today. You guys can see my bullish targets were 94 cents, a break above 94 cents, and the next targets were $1.05. Again, given this information to the CYPRX community members in advance, looking at the date as 6:23 p.m. yesterday, heading over to the AGX charts, you can see March 5th, 6:23 p.m., roughly around that time. Looking down at the bottom of my charts, price action was roughly around here, hovering at around 80 cents. And you can see that price action trickled up and made its way into $1.05 to the absolute freaking pip. Now, how were we able to conjure these specific targets? Obviously, of course, the delta zones came into effect here. However, logical technical analysis and sound fundamental principles also played a massive role. So check this out. Also publicly on the X space, what did we mention to you guys? Looking at the date, again, time that these influencers and individual technical analysts are putting out information to you guys on the charts is extremely important. I'm very particular with where I post things out and where I put information out in the CYPRX private community. I make sure that if I'm looking to buy, I'm putting information out at bottoms of price action. Okay, and you guys can see down here, looking at the bottom of my screen, 6:02 p.m., I put out this analysis, right? So just let's go look at the charts on AGIX. Roughly around 6 p.m. my time here in California is when AGIX was here. Circling this green area is where I put this analysis out to you guys. And it goes on to read, the ideal scenario that favors the suppression of the dollar below the 103.800 level and potential decline towards the lower 103 psychological level would involve downbeat ADP NFP numbers, JOLTS job openings missing the market forecast or falling below previous readings, coupled with a dovish tone from Jerome Powell. This combination is likely to lead to the increased demand for risk assets due to the expectation of rate cuts by the Federal Reserve, hence explaining the potential for dollar weakness and sustained appetite for riskier investments. I gave you all what would potentially play out if we saw the inverse and what would potentially play out if we saw mixed data. So again, fast forward to today, looking at the analysis I gave to the private members, we got all of those things playing out to the T, which allowed for risk assets to continue to flourish today. So just reading the real quick market update and recap and overview from today, risk assets across various markets. And again, this is important. So make sure that you all are taking notes. Make sure that you all are tapping into things and factors that are actually driving price action. Here at CYPRX, our goal is to educate you all. We're not here to tout fancy Fibonacci numbers and give you guys these magic price predictions. We're here to show you all accuracy, devils in the details by disciplining yourself, taking advantage of research, education, sound technical analysis principles, and obviously, of course, assessing your risk properly. This is all achievable, people, okay? If anybody is out there on the internet that you're following right now is giving you guys magic Fibonacci sequences, telling you all that some magic indicator is going to save your trading, they're lying to you. Unfollow them and start tapping into some of the information that we are providing here. We've shown you guys time and time again how easy this is if you discipline yourself and you stay committed. So I said risk assets across various markets. This is now the market overview from today after putting out all this information to you guys, have bounced back from their recent downturn, notably with Bitcoin yesterday witnessing a staggering drop of $9,000 in just one candlestick. In our previous analysis, we highlighted the necessity of downbeat data and dovish comments from Federal Reserve speakers to sustain the weakening trend of the dollar and foster a positive risk sentiment in the market. Today, what did we see? The dollar index started on a weak note, sliding by negative 0.32% and hitting a one-week low. This decline was spurred by the disappointing U.S. Feb ADP employment report, revealing that companies hired fewer workers than anticipated, thereby signaling a dovish stance in Fed policy. The dollar's decline further deepened following remarks from Fed Chair Powell, who hinted at the likelihood of initiating a reduction in borrowing costs at some point this year. Additionally, the surge in stock and crypto markets strengthened today so has the diminishing demand for the dollar as a safe haven asset. Key economic indicators for the U.S. today included the February ADP employment change, which rose by 140,000, which was slightly below the expectations of 150,000. All the factors that we wanted to see to further the risk on market mood weaken the dollar played out to the absolute T. Now, let's get into the technical analysis. So remember, you're layering these things. Obviously, of course, a sound psychological approach, having mental stability in this market and the kahunas to actually take trades, obviously, of course, plays an important role, while obviously assessing your risk properly, not over leveraging and impulsively trading, okay? Impulsively trading, meaning yesterday, what did we see? The massive quick sell-off or flash crash in the market. If you go on X Space and you go back to all the posts yesterday amongst all the influencers, they were completely confused. They were mind-boggled. Why was Bitcoin selling off after reaching an all-time high? Oh my gosh, what's going on? People, you got to control your emotions. Here in the CYPRX private community, we even had members telling us that in other discords that they are a part of, people were panicking. Yet here at CYPRX, we knew exactly what was happening. We knew exactly what to take advantage of. Now let's tap into the technical analysis. So you're going to layer this stuff. Sound psychological approach, fundamental understanding, and then comes technical analysis. Technical analysis, you'll notice in our strategy, is last. Obviously, of course, it plays an important role, but the vast majority of retail market participants think that TA comes first. That is so backwards and so incorrect. It is not even funny. If you are only focused on technical analysis for your survival and your success in this market, you will get wrecked. Okay. If you don't have credentials and fundamental factors and things backing your trade ideas. So the first thing was a sound psychological approach. We know, obviously, of course, here at CYPRX, that the overall market sentiment and risk assets has been bullish. It has been bullish since pretty much November in 2022, when the whole entire narrative that at some point in time in the future, the Federal Reserve was going to start to cut interest rates started to come into fruition. Keeping that in the back of our mind, that gave us the sound psychological principles to continue to look for buy positions since then, right? If you guys have been following along with CYPRX, we've been touting that. However, now couple that with fundamental factors. In the today, we were anticipating that if these factors, i.e. dovish Fed comments, right, lower or downbeat data from the U.S. front, and dollar suppressed underneath of key psychological levels would then lead to further increased momentum in risk assets. So we got those factors playing out to the T as well. Couple that with now technical analysis. Let's just go over our strategy. Our strategy here at CYPRX, whether you're a dollar cost averager or a leverage trader, is to be looking at where banking institutions bought from, i.e. I say banking institutions, whoever is in control of this market, highlighting key areas where they bought from that broke previous bearish market structure that led to new market structure highs, and be buying at a discount from those key levels. Well, using my session indicators, again, which is one of the only indicators that we use here at CYPRX, it signals where specific sessions took place. Now, down here in this specific area, I want to take your attention. You can see we had some Asia session buying going on down here in this area. We had some London session buying down here in this area. And then fast forward to the next day, we also had some more Asia session, London session, Asia session, and New York session buying, where they drove price to a new high on AGIX during 2024 price period of around $1, right? Interestingly enough, when we had that flash crash, where did the market discount itself down into? So now going into detail with the CYPRX strategy, what we like to do is we like to take our handy dandy box tool. We like to identify discounted areas. So you can see at the bottom of these lows, Asia, London, and New York session were most likely buying. We know that market makers are the only people with the amount of money to push price down into a discount to then buy it up and move it to a new price level. You can see here, all of this bearish price action was completely engulfed by this bullish momentum. So highlighting from this previous discounted area and extending that area of interest over to the right-hand side, yesterday, when the flash crash happened, look at where price discounted right into, where the banking institutions utilizing our session indicators were buying at in previous sessions, where they saw that this was a discounted price enough to drive further demand for risk assets and send AGIX up into roughly around $1. All right. Now, let's go down to the lower time frame now that we have our higher time frame area of interest, going into a more detailistic perspective as to where we were putting this information out. Let's now jump down to the 30-minute price chart. Here you can see the institutionalized pattern that, again, we have touted paying attention to here at CYPRX on multiple previous video breakdowns, where we have our higher time frame area of interest, right? That's first key. Obviously, of course, when you're doing technical analysis, you want to start on the higher time frame. So we can see that price trickled down into our higher time frame area of interest. That's technical analysis confluence number one. Buying from where previous banking institutions were buying from back in the past, so that way we're not buying at tops and we know that we are buying at somewhat of a discount. Then paying attention on the lower time frame to areas of liquidity getting taken from the market. Here you can see a pre-engineered low. That low then liquidated with this massive candlestick. Following that low, instead of the market continuing the downwards trend, i.e. creating the definition of bearish order flow, lower low, lower high, lower low formation, we then started to see signs of a reversal, where we see a higher low come in after a low in the market and a liquidity grab. The market then starts to print the definition of bullish order flow, which is a higher low, higher high formation, where this higher low, higher high formation completely engulfs the previous bearish manipulation move. Couple that with, think about it. Think about what I'm trying to show you guys. Zoom out. Remember what we started with. We started with the psychological understanding that the macro trend right now in risk assets is bullish, right? That is a supporting factor that gave us confidence to take this trade and make this analysis. Number two, intraday fundamentals. We had all of these factors play out across the board, where we were looking for dovish Fed sentiment. We were looking for downbeat US data and weak US dollar. We got all of those factors playing out to the T as well. Couple that with now price, interestingly enough, coming down at the same time all of these fundamental principles are playing out into a discounted area from where banking institutions bought from before. It is not a coincidence, people. Do you see how the layers commit, right? Now, all that's left to take place is sound technical analysis and understanding where to enter. So after we created this higher low in the market that led to a new higher structure break of all previous bearish market structure, all that was left for us to do was now take our Fibonacci tool. You see how the Fibonacci tool, we utilize it here at CYPRX, and how we implement it is used after all of these other layering catalysts have taken place. From the low to the high to wait for a further discounted entry. Today, the predominant majority of us here at CYPRX are New York session traders. You can see that New York session bought at a 50% discount from where Asia session, the previous session, where we were giving all these technical analysis plays out and fundamental breakdowns we're buying from. Here you can see Asia session bought from this area. Again, taking our Fibonacci from the low where Asia session was buying to the high where the market broke previous bearish market structure, you can see the New York session was simply just buying at a 50% discount from where Asia session was buying from. And sure enough, market momentum continued, followed by the downbeat data, weakening US dollar, risk on market mood, and we smashed the $0.05 psychological level targets that, again, we gave in advance to our private community members to the absolute T of a degree. Not only sound fundamental principles, also psychological understanding, not only of ourselves, but of the macro environment and the trend overall. Couple that with technical analysis from a logical perspective, not giving bullish moonboy targets, looking for immediate price swings. As always, giving you guys the realest information. If you found this video breakdown insightful into the ways that we look at the market, again, consider joining our monthly program. We now have about 93 slots left available for the general public before we cut access. You guys can visit CYPRXtrading.com if you want any further insights into the education and value that we provide here. As always, many blessings to you guys. Be cognizant, smash that thumbs up button and subscribe. We do appreciate the love and support, and I will see you all in the next video breakdown.